Well, up next, we're putting the spotlight on the paints sector. Yesterday, remember, crude oil prices stumbled. Brent is below $70 a barrel, which is a great headline. And we saw a lot of the crude sensitives rally big time. It was OMCs. And of course, within the consumer arena, it was paint stocks, particularly Asian Paints. It was a nifty winner, up almost 4% yesterday. Asian Paints so far this year is actually flat. Perhaps you can argue that it's been in a long bear market of its own much earlier than the last 6 months correction started. And the stock is just checking how much is it off its 52-week high. It's about 35% off its 52-week high as well. So is the worst getting over for the paint space? Let's ask Abneesh Roy, Executive Director at Nuvama Institutional Equities. Abneesh, great to have you on. Thank you for joining in. So what do you say? I mean, a lot of these stocks have been already battered down so badly that do you expect that bear market to start ending?
Yeah, thanks for having me. Yes, we are picking up some recovery in terms of the paint demand. In the first 9 months, the paint industry saw almost flattish volumes. Of course, in that space, our top pick will be Berger Paints, not because Asian Paints, any execution issue is there. The problem with Asian Paints has been last few quarters, the urban salience. If you see any of the top metro cities, complete dominance of Asian Paint is there. And Berger is more of rural India, East India, Central India. And there the slowdown is much lesser. In fact, rural India, there is a recovery. So in the near term, medium term, we continue to prefer Berger Paints over Asian Paints. But overall sector, our sense is there is a slight recovery in terms of demand. And in terms of crude oil, absolutely, yesterday's good performance of Asian, Berger, etc. Crude oil clearly is comforting. From a market share perspective, Birla Opus has taken, in our view, around 5 to 6% market share. The distribution scale-up has been good for Birla Opus, around 50,000 dealers, touching almost that. The advertising spends by Birla Opus has been high. So currently, if you see Cricket World Cup, Birla Opus is spending a lot of money there. In the IPL, it starts in the next 2 weeks. Again, Birla Opus is one of the key sponsors. So my sense is ultimately Asian and Berger Paints, if you see last 30, 40 years, they always come back. FY26, how we see the margin recovery will happen, demand recovery will happen for Asian and Berger. Berger, in fact, our sense is Q4 itself will be high single-digit volume growth for Berger, but Asian will be still maybe 3-4% volume growth in Q4. But FY26, how we see is basically gross margins will improve because of the crude oil, but I think the ad intensity for the sector will remain in FY26. That will remain.
That was a lot of numbers, Abneesh. I'm just trying to write this down. You said 3 to 4% volume recovery or 3 to 4% volume growth for Asian Paints in Q4. Berger, yes, which is the one that you like. What's the volume growth expectation you're going with?
Yes, absolutely. We like Berger. Our sense is 8 to 9% volume growth is possible for Berger in Q4. Yes.
8 to 9% volume growth in Q4 for Berger. That's much better than Asian. Simple question. Now let's talk FY26. Overall, what is the volume growth that you will pencil in? Who will be at the lower end? Who will be at the highest end? Will it be Berger? And then that valuation question comes in. That, I mean, if Asian is going to deliver, say, 5% volume growth in FY26, do you still want to buy that at the current valuation multiple? So, juxtapose the valuation argument on the growth argument for us.
Yes, definitely. Our sense is Asian Paint should be able to deliver 5% kind of volume growth because we are picking up some recovery in terms of the demand. The base also for Asian Paint does become favorable after Q1. The urban slowdown, which is impacting Asian Paints currently much more than, say, Berger. Our sense is from Q2 overall, we expect urban recovery to start for the sector. Currently, it's weak for FMCG paints everywhere. Because of the union budget tax reprieve, we do see that from Q2, Asian Paints recovery will start. Coming to valuation comfort, Asian Paints is available below 40 times P multiple FY27. Our sense is that's a very reasonable, very tempting valuation. And we do see that FY26, we will see the re-rating start for Asian Paints. It has the reasons for crude oil, the recovery in demand definitely. And ultimately, our sense is Kanza and Axo are at a greater risk of market share loss. Structurally, we will monitor what happens on Axo. Our sense is JSW is the front runner and Pidilite also could be a very serious contender. That is one more thing we'll watch out for.
40 times, guys, you remember the last time we said 40 times for Asian Paints in terms of forward earnings? So you're saying FY27 actually 40 times. I don't remember the last time the number 40 was used with Asian Paints when you're talking valuations.
Absolutely. And yeah, that's the thing with the market, right? I mean, 70, 80 has become 40, but 40 is 40. So it's a conundrum in that sense. Abneesh, you track some quick commerce names as well, right? That space?
That's tracked by another analyst, internet analyst, but there we like Jubilant Foods a lot. And even in Avenue Supermart, my sense is today also, if you read, Zepto is focusing more on the profitability, increasing the charges.
Oh, there is an article. I was trying to. I don't order that much. I mean, but I was trying to order something yesterday, and all the discounts were like on Zepto. They were all like 2 rupees, 1 rupee discount, 5 rupee discount. So the big discounts seem to have disappeared. But I was not sure, since I'm not a regular user. Maybe they've already been gone for a while. But if you're saying there is something to that effect now which says they've lowered, and Zepto has been the competitor, right, which has been putting pressure on others as well, not to be able to sort of up their game and focus more on profitability. So if they stop discounting, good for the overall sector from a market point of view.
Yeah, it should be. If you see even comments by Zomato that the big disruption is by Zepto, yes, I would expect that. But in the discretionary space which I cover, I like Jubilant Foods. I do like Trent, V-Mart and Titan. Those will be my coverage names. But yes, we are picking up that because of the overall market meltdown, focus on profitability, I think the discounting, etc., should come down, which is also positive for FMCG larger players, that ultimately it's about product innovation and distribution rather than just discounting.
I can tell you, Prashant, as a recent Zepto users, they're getting smart about it, and actually they're saying that as well. I think a bunch of our colleagues were speaking with Karan Torani. I guess you guys were speaking with Karan just a while back, discussing quick commerce, and I've seen that as a user. The discounting is now being clubbed with large value orders. So above 600 whatever
Super Save or something, which is only eligible on 700 rupees.
There's a minimum
plus
order value, so they're getting a little more tactical with their discounting.
I wasn't sure whether this is less discounting, more discounting.
It was confusing. It was very confusing for
But
I was surprised to see proudly 1 rupee discount, 2 rupee discount on 200, 300 rupee items. So I thought maybe they've actually lowered it a little bit. Thanks very much, Abneesh, for joining us. I think we're about 3 minutes away from market open. We'll continue this chat with more in terms of what you cover, what you like. But 9-10 calls, Mitesh is